Due to the massive demand for cryptocurrencies and the growing nature of the market, there has been a surge in associated scams. As a result, investors must protect themselves from fraudulent crypto tokens and exchanges. Every investor or non-investor is a fixed target for con artists attempting to make quick money by taking advantage of people who will do anything to get rich quickly. Hello and welcome to Crypto Trends. In today's video, we cover facts and tricks on how you can stay away from cryptocurrency frauds. So watch till the end to know about all of these fantastic games, and drop a like if you want us to bring more videos to you. Let's get to it right now. As you become more involved with the new digital monetary systems known as cryptocurrencies, you quickly realize that there is danger involved in these transactions. And we're not talking about market volatility. Scams on the internet and Bitcoin exchanges are no exception. Beware of the various risks of losing your Bitcoin investments when you consider investing in various firms and exchange platforms. In the recent past, cryptocurrency price movements have been extreme, with Squid Game-based coin Squid, CocoSwap, and Ethereum Meta rising thousands of percentage points in mere hours. Many tokens have also plummeted dramatically, trapping investors. A simple technique to determine whether a token is a scam or not is to look at whether the investment program promises unreasonable profits in a short period. Another sign of a scam token is that scammers promising crypto giveaways require investors to send a few coins for address validation. Another method is to use hacked or fake social media handles of well-known individuals who promise fast doubling of Bitcoin sent. An overview of cryptocurrency scams. What you need to know. Cryptocurrencies such as Bitcoin, Ethereum, Solana, and hundreds more are hot commodities in online trade, and a wise investor can benefit handsomely. However, the temptation of quick riches might blind some people to the risks, allowing thieves to mislead them into scams. No government or central bank is backing this virtual currency. Nonetheless, crypto can be used to purchase products and services, exchange for US dollars and other traditional currencies on digital exchanges, and even obtain through specialized ATMs. Unlike government-backed money, however, the value of virtual currencies is determined by supply and demand. This can lead to great swings in the market, resulting in significant gains or losses for investors. Furthermore, cryptocurrency investments are subject to significantly less regulatory oversight than traditional financial instruments such as equities, bonds, and mutual funds. In recent years, cryptocurrency fraud has increased dramatically. From October 2020 to March 2021, the Federal Trade Commission, FTC, received over 6,800 complaints about cryptocurrency investment schemes, up from 570 the previous year. The reported losses were more than tenfold to more than $80 million. Despite cryptocurrency's high-tech luster, many of the associated schemes are modern versions of old scams. The most common scams and some ways to avoid them. Unfortunately, there are numerous ways for some internet users to mine or steal cryptocurrency using insecure computing equipment. Fake mobile apps. Scammers also frequently use bogus apps available for download on Google Play and the Apple Store to defraud cryptocurrency investors. Although stakeholders can typically quickly identify and delete counterfeit apps, it does not mean that they are not influencing many bottom lines. According to Bitcoin News, thousands of individuals have already downloaded fraudulent Bitcoin apps. While Android users are exposed to a higher risk, every investor should be aware of the possibilities. Are there any apparent misspellings in the copy of the app's name? Is the branding unauthentic, with odd coloration or an erroneous logo? Take note and think twice about downloading. The giveaway hoax. A formula is used in the most popular social media cryptocurrency fraud. Scammers impersonate large brands and celebrities to advertise giveaways that offer to double your money if you transfer Bitcoin or other crypto assets into a specific wallet address. Of course, this is not the case, and once you transmit your cryptocurrency, it is gone forever. It is worth knowing that there are also legitimate offers that circulate on Twitter from time to time, but do your homework before engaging in any way with a giveaway. Your initial step should be to conduct a basic Google search for the giveaway. Chipotle and Cash App held Bitcoin giveaways. They all had official blog entries that were easy to find and detailed the giveaway's terms and conditions. Email scammers. Even if it appears to be an email from a respectable cryptocurrency organization, proceed with caution before investing in your digital currency. Is the email identical and are the logos and branding the same? Can you confirm that the email address is indeed associated with the company? The opportunity to check on this is why hiring a company that employs real people is critical. If you have any doubts about an email, ask a coworker. Also, never go to a website by clicking on a link in a message. Scammers frequently launch fraudulent ICOs, or initial coin offerings, to steal large sums of money. Don't get taken in by these bogus emails and website offers. Take your time going over the details. Accounts that are not verified. Another frequent method con artists use to steal cryptocurrency is to exploit social media platforms' trust signals, such as blue check marks on Twitter. The issue is that scammers will either generate profile photographs with a blue check mark or creatively use wallpaper to integrate a blue check in just the perfect position to appear authentic. Another thing to look out for is those who use Ethereum domains as part of their handles. For those unfamiliar, an Ethereum domain name is a means to create a shortcut for sharing your identity on the Ethereum blockchain. The ETH domain name has enabled users to perform semi-verification. Fraudulent websites. You could be following a solid recommendation from someone with a lot of skill and still become a victim by accidentally accessing a bogus website. A surprising number of websites have been set up to look like authentic, legitimate startup companies. Be cautious if there isn't a little lock icon signaling security near the URL bar and no HTTPS in the site address. Even though the site appears to be one you expect to be visiting, it may lead you to another platform for payment. For example, suppose you click on a link that appears to be from an accurate site, but the attackers have crafted a phony URL with a 0 instead of a letter O in it. Of course, that platform isn't directing you to the cryptocurrency investment that you've already investigated. Enter the URL rightly as it appears in your browser to avoid this. Also, double check it. Twitter mishaps and other social media updates. You can't be sure you are not following imposter accounts if you follow celebrities and executives on social media, and the same is true for cryptocurrency, where malevolent, impersonating bots abound. Don't believe offers from Twitter or Facebook, especially if the outcome appears to be unattainable. Fake accounts are commonplace. If someone on these networks asks for even a tiny quantity of your cryptocurrency, you will almost certainly never be able to recover it. Don't think that just because others respond to the offer means they are not bots. You must exercise extreme caution. What you must do to avoid scams. Number 1. Recognize the danger. Even if you are not a scam victim, the virtual currency trade is speculative and volatile. According to the FTC, an investment that may be worth thousands of dollars on Tuesday may only be worth hundreds of dollars on Wednesday. Number 2. You should carefully study any agreement with a digital wallet service. The Consumer Financial Protection Bureau advises that they may refuse to accept responsibility for replacing your money if it's stolen, unlike banks and credit card issuers. Number 3. Resist the urge to buy straight now. Scammers frequently attempt to instill a false feeling of urgency around an allegedly hot cryptocurrency. Number 4. Before you acquire virtual currency options or future contracts, make sure to check out any dealer. The Commodity Futures Trading Commission, CFTC of the United States, has a tool for doing an online background check. Number 5. Before supplying credit card information, wiring money, or disclose sensitive personal data, extensively study any virtual currency site or digital wallet provider. Moreover, it is critical to invest only after conducting due diligence on a project, which includes researching the white papers who adhere to know your customer and anti-money laundering policies, the background of these founders, and the quality and reputation of the exchange's customer support infrastructure. Before investing in cryptocurrencies, learn more about staying safe and safeguarding yourself in this growing industry. And this brings us to the end of today's video. As much as we would love to excite you about the various crypto news and happenings, we also ask you to be wary of all the fraudulent acts circling the internet. Subscribe for more content from us. Like the video, share it with others, and press the bell icon to get regular updates from crypto trends. See you in the next video.